Welcome to this short video where I'm going to be providing a succinct summary of the key drivers and outlook for the aluminium market. In particular, I'm going to be drawing on the insights of industry analysts and experts as presented during virtual LME week events that took place over the last couple of weeks. In terms of the overview for aluminium, the pandemic demand disruption this year has hit the market pretty hard really. Surplus estimates based on various analysts are on the order of 2 to 3 million tonnes for 2020. And you find that most of that surplus was really outside China, but was largely absorbed by a big surge in Chinese imports amid a recovery in domestic demand inside China, and also by a lot of metal moving into storage as part of metal financing deals. Investor net positioning in aluminium remains pretty bullish really, and that's amid expectations that you're going to see a continued demand recovery into 2021. But basically, China's smelter capacity growth is going to offset some of that recovery in demand, and we're still expecting to see a pretty significant surplus into next year. If we dig into supply in a bit more detail, you'll find that primary aluminium supply growth estimates vary between maybe 1 to 2% for 2020. Chinese smelter capacity growth and production growth has really driven that increase. They're the most profitable, those smelters, since the financial crisis, according to CRU estimates, and that's really driven a big increase in capacity, around 7% growth this year, mainly centred in the southwestern province of Yunnan in the southwest of China. Slightly lower growth in capacity is expected next year, but it's not likely to hit the 45 million long-term capacity cap that China has on its aluminium smelting capacity, and that means that we're going to probably see continued output increases in terms of Chinese production next year. In terms of demand, estimates are that we've seen perhaps a 5% decline in demand this year in terms of primary aluminium. There's been year-on-year growth in Chinese aluminium demand since April that bounced back really very quickly, but the rest of the world stayed in double-digit decline for the early part of the year and has now recovered to a single-digit decline. Chinese demand is expected to continue to recover next year as a result of continued support from policy stimulus for sectors like infrastructure and construction. But ex-China sectors, particularly transport, remain pretty weak, although we expect to see a continued rebound in 2021, but perhaps not to pre-pandemic levels. In terms of the market balance and outlook for aluminium, the surplus for next year is anticipated, again based on the variety of analyst estimates, of somewhere between 0.5 and 1.5 million tonnes. The ex-China market is probably going to be under a bit more pressure than this year, because you're going to find less import demand from China as its supply kind of ramps up to soak up that excess supply that you're seeing in the ex-China market. And that's going to test the financial capacity of the market to absorb that excess supply in finance deals. I think the market's going to continue to rely on sustained investor belief in the continued recovery in the physical market because the fundamental situation is not particularly strong. So that's the outlook for the aluminium market. For more LME week insights, I encourage you to view our other LME week review videos, which include a base metal markets overview and drill downs into individual other metals.